Hello and welcome to today's virtual Lunch and Learn, which is entitled Cyber Liability 101. My name is Ted Holsey and I'm your host for today's event. First, let's go through a few housekeeping items. All participants are in listen-only mode. Today's session will be recorded and circulated to all registrants. Thank you for joining in for the live session. Your questions are strongly encouraged throughout the presentation. I will be monitoring the Q&A log in real time and will be sure to ask our speakers your questions as we go along. Please make sure to use the Q&A tool and use the chat function for comments only. We look forward to your input and feedback throughout the conversation. Today's event is a virtual lunch and learn. We have provided each participant with a $25 DoorDash gift certificate. You should have received your unique code via email. Our goal is to allow you to enjoy a convenient lunch while listening in on today's discussion. If there are any issues with your gift certificate, please contact me directly and I will try to resolve it in real time. We discovered that some of my emails with the gift certificates were going to spam, so please double check your spam quarantine for the gift card. If you forgot about the lunch part, rest assured that your gift certificate is active and hopefully you can use it at a later time. Now let me introduce our speakers. Heather Wilkinson is our guest speaker and a Senior Vice President at Willis Towers Watson in their Finex, Cyber, and E&O practice, with over 14 years of experience in the cyber insurance industry. Heather is a founding member of the Willis Towers Watson E&O and Cyber Broker team. She joined the organization in 2006 and has been instrumental in placing some of the largest E&O and cyber insurance placements in the world. She speaks frequently on cyber and professional liability issues and is based in Los Angeles. Heather will deliver the bulk of today's presentation, where she will share key insights on cyber liability for our attendees. And Michael Cocanower is our sponsor for today's event. Michael is the founder and president of itSynergy. He now has over 25 years in the IT field. Under his leadership, itSynergy has built an impressive client roster and has experienced exponential revenue growth. Michael has been recognized as a Microsoft Certified Professional and Microsoft Most Valuable Professional, as well as having earned certification as a Certified Ethical Hacker and as an Investment Advisor Certified Compliance Professional. itSynergy specializes in helping registered investment advisors manage their technology and cybersecurity posture. Michael and his firm help RIAs manage their cybersecurity risks and stay compliant with SEC regulations. Michael will share some key insights into how RIA leaders can get started taking their cybersecurity and compliance approach to another level. Now, let me turn things over to Heather.
Great. So everybody, if you don't mind bearing with me a little bit, I think we have a bit of a lag in the actual slide materials. So a little bit of credentialing, first of all, about Willis Towers Watson. We are the third largest brokerage in the world, and within our Finex practice, which is a fancy way of saying financial and executive lines, we have over 10,000 clients that are utilizing Willis Towers Watson to procure D&O, E&O, cyber, EPL, crime, fiduciary types of insurance policies. And we are located in more than 120 countries. We've placed more than $3 billion in gross premium annually in the marketplace. Year over year, our cyber practice has experienced about 60% growth, which is phenomenal, and it's resulted in our team growing at an exponential rate. When we started our practice back in 2008, there were 6 of us here in the U.S., and now we've got more than 100 professionals in the U.S., and we've got another 50 or so scattered across the globe in all of the major regions that you would be looking for an insurance professional. So that is Willis Towers Watson. I'm going to move down into the presentation now. So I wanted to start by taking a little bit of a step back, because it's to understand the cyber insurance and what you're really looking at protecting with the policy, you really need to understand the environment that goes into all of the factors that are leading to the protection of the actual insurance. So I'll talk a little bit about the actual environment and the threat vectors that we consider when we're placing the insurance. And I want you to keep in mind as I go through this presentation that we're really looking at this as 2 potential risks. So there's the data side, so whether that is your own data or third-party data that's been entrusted to you or via a third party that you have entered into contract with to store data, and your network. So those are the 2 main components of cyber insurance: data privacy, network security liability. And when we take into consideration those risks, we like to obviously consider what are the things that impact those risks and take a step back and look at how claims actually occur. So I don't think that anyone on this webinar today is probably immune to the fact that there have been very large, widespread media-driven claims or media-exposed claims when it comes to things like ransomware and when it comes to some of the larger data breaches that you may have seen with some of the health insurance companies or very large credit bureaus. So what are the causes of these large claims? We look at the 5 main threat vectors as the malicious insider. That would be your quote unquote rogue employees. So you have employees who are working outside of the scope of their authorization for their own either personal gain or just to create instability and wreak havoc within an organization. More common than that, though, is the negligent insider. So as we rely more and more on technology, again, as we start to look at some of the impacts of COVID-19 and the mobile workforce, we have individuals who are failing to either adhere to protocol or are becoming a little bit less diligent in how they respond to outside cyber threats. So we'll go through some claims data later on, but probably about 60 to 65% of cyber claims right now are caused by sheer negligence of employees. Criminal hackers. So criminal hackers, of course, are always going to be the other side of that negligent insider, where you have your outside sources that are finding a way into the system, whether it's through sheer brute force or through patient scraping of credentials. And again, utilizing that negligent employee, actually having employees give credentials and then entering into a network and either taking over platforms, causing denial of service events, or exfiltrating data. The 4th vector would be hacktivists. So those are the individuals or the groups that are sheerly intending to cause disruption or embarrass a target. We used to see these with massive denial of service attacks. Now you typically see it where an organization's social media might be taken over, and really it's a reputational based impact is what the hacktivists are going for. And then the second most common threat that we're seeing now, aside from the hackers and the negligent employees, is the third-party compromise. So the way that you're utilizing your vendors, the information that your vendors are now responsible for, how they impact your organization's cybersecurity, and what happens if there is a compromise at that vendor level. So whether it is a direct operational impact or a contingent operational impact because of how you are utilizing those cloud services is another one of the key areas that we see claims occurring. And as we go through the organization, please feel free again to ask questions. It always works best if it's interactive. If there's something that catches your eye and you want me to stop and spend a little more time on it, I'm happy to do so. This slide right here, common areas in cyber risk management, really all of these could be red, but then it would be a pretty colorful slide. So we've left some of them white, some of them red, really just to highlight the areas of concern that we find most organizations taking into consideration. They cover everything from asset management, understanding what the crown jewels are of your organization, where you're keeping them, how you're classifying them, what protections surround them, to your employee training, the management of the people side of the equation, and then everything in between. It includes incident response, it includes access and privilege management. It is really your entire cyber hygiene. And then how do we go about identifying what your specific risks are, and then how do we address that via the transfer of insurance? Sorry, this delay is getting me a little bit. I won't go through every detail on this slide. It's a pretty busy slide, but when we talk about the cyber market, we're talking about a lot more than just what the insurance carriers are doing and how they're rating your particular cyber exposure. So the cyber market changes on an almost monthly basis at times, and things that impact it are not only the threat vectors that we talked about earlier. So right now, ransomware, of course, is a huge problem. We don't see it going away anytime soon. In fact, in 2019, a typical ransomware loss was about $1 million. I think when the claim statistics come out for 2020, you're going to see that number be a lot higher. Ransomware has been very, very easy to deploy, and it's costing companies millions and millions of dollars a year. We used to see the demands on a ransomware very small, I would say in the tens of thousands of dollars, where the perpetrators were really trying to stay underneath that law enforcement radar, to now you typically see it in the 7-figure range. So astronomical increases in both demand as well as cost to an organization. the actual cost of a data breach is going up as well. So in 2019, there was a 12% increase in the average cost to respond to an incident that impacted private information or publicly or personally identifiable information. It went up to $3.92 million for the average cost to respond to a data breach. So that would be all of the different elements that go into the response as well as civil litigation. But that number continues to grow year after year as more and more regulations are passed. There's more things that influence what an organization could spend money on as a result of an actual data breach. I mentioned the statistic on the loss that are attributable to the human element earlier. So 63% are attributable to simply human negligence, whether it's an employee emailing out the wrong information to an unauthorized source or giving up their credentials to an individual or a phishing email that is claiming to be an individual within the organization. And despite all of that, we do see policies expanding. So every year we're seeing changes in how the policies respond to the new threats that are introduced, as well as carriers that are willing to cover new things every year. So while some of you may have experience with GL policies or some of the more miscellaneous E&O type policies that have kind of remained the same year over year since they came into existence, cyber is always changing. It's always growing, it's always amending, it's always reacting to the claims that we're seeing in the marketplace. And the other thing that really factors into how a cyber policy responds is from a regulatory perspective. So there are a number of other regulations on a global basis that aren't listed here. These are kind of the main ones that we look at right now. Singapore should probably certainly be added to the international privacy legislation laws. But I would say that the number one and number two laws that are really being considered as impactful from a cyber insurance perspective are the General Data Protection Regulation, commonly known as GDPR, and then the U.S. privacy notification laws, particularly the California Consumer Privacy Act, or CCPA. So these two regulations in particular really changed how a cyber policy could respond to a regulatory investigation. So previously, if there were a breach of personally identifiable information, and depending on a state or a country law, an organization might be legally required to notify those individuals whose information had been impacted, the policy would respond not only for that notification piece, but also if a U.S. Attorney General or if an international regulatory authority were to inquire or levy a fine or penalty against an organization for that breach. And as long as it was insurable by law, the policy would react and pay those fines and penalties, pay to defend the insured in suit with regulatory bodies. Well, now we're seeing with these new changes in regulation that simply by the nature of how a company acquires, how it processes, how it stores, how it utilizes information that relates back to a private individual can be used as a stepping stone to incurring privacy fines and penalties. So there no longer has to be an actual breach of the information. There doesn't have to be a hacking event or a virus or an employee who is actually accidentally disclosing this information. Now, just during the general business practice, your organization can be found to be non-compliant with some of these new regulations and incur fines and penalties. So that's the way that the insurance has had to change reactively to protect an insured against an inquiry or a fine or a penalty that might not be as a result of an actual cyber incident. So what can you expect then from cyber insurance? Well, as I stated earlier, the market is continuing to evolve and develop. So it changes on a regular basis. There are times when we have had to change and really amend policies midterm because of the threat environment and because of the way that we're seeing claims play out in the marketplace. My credentialing slide at the very, very beginning showed that we have recovered over $1 billion in losses on behalf of our clients. Well, some of those losses have only been able to be retrieved because one of the things that the insurance carriers are really willing to do is take a look midterm and see how the risk is changing and amend policy terms and conditions in consideration of that. Lloyd's of London estimates that the market for cyber insurance could surpass $85 billion, and I believe that the date for that is about 2025. So in just under, I would say, cyber has been a mainstream product since the early 2000s, and that number has just grown astronomically and will continue to grow as more and more companies see a way for them to keep capital internally by transferring some of this risk through the insurance practice. The policies are not standardized. So while your E&O policy or a GL policy or a property policy from one carrier to the next might look very similar or have very similar triggers in coverage, a cyber policy is not standardized. So there are very, very few decisions that have been published, whether federally or on a statewide basis, that stipulates what a company should be doing from a cybersecurity perspective. And so the policies don't have a standardized response for that. So they're very customizable. Some carriers are willing to cover a lot more than other carriers are. Some carriers prefer to sit excess of a different primary policy. Some carriers really want to have their own published policy as the primary line of defense. So really, from the standard of how the insurance policy reacts, it's really critical that you understand both what you're looking to cover and then what the terms and conditions of your policy are. Applications are definitely more onerous and detailed than applications in other lines of insurance. They do create a bit of risk for rescission based on material misrepresentation. So it's really important, if you are buying cyber insurance, if you're in the market to buy cyber insurance, as you complete that application, you're being very, very careful about the representations that you're making when you're checking those boxes. The various types of cyber attacks. So we talked about some of the main threat vectors when it comes to, again, protecting data or protecting your network. But there are some main ways that we see these cyber attacks occur. The number one method, of course, is ransomware. So very, very easy to deploy. It's typically done on a mass basis. Somebody clicks on the wrong link in an email, and then the network is compromised. It comes with very, very swift encryption, system by system, and it can cripple an operation very, very quickly. Unauthorized access, so this would be whether it's a hacker coming out or coming into the network through brute force or through a vendor's access credentials or through an employee's access credentials. Unauthorized access is the number two way that we're seeing claims occur right now. And the third and fourth, business email compromise and social engineering, these two could probably actually be one actual cyber attack. Typically, the social engineering and the business email compromise are a little bit more tailored. They're more directed specifically at either a particular individual within the organization or just in general to the organization. And it's typically a little bit more flavorful. It has a little more detail on how the company operates, and it basically just tricks an employee into giving up their credentials. So a big scam that we saw in 2019 was the Microsoft email compromise. So you would get an email that looked like it was coming from Microsoft IT saying, hey, you need to click on this link. We're doing maintenance on the network, or this is IT, we need your credentials for ABC reason. And employees, thinking that they were being good employees, were actually just entering in their credentials into this email response and then granting access to the entire email system that they had access to. Hacktivists, we talked a bit about that. Depending again on social media presence, that's really where we're seeing the hacktivism these days. It's big, I would say big name companies, big name organizations are the ones that are a little bit more targeted by the hacktivists, but they are out there, and if they think that there's a way that they can gain either notoriety for themselves or for whatever cause they're supporting, they will attack an organization. And then the insider threat. So again, those rogue employees, those disgruntled employees who are really going outside the scope of their authority to cause an issue within an organization are also in that top 10 ways that we see cyber attacks occur. And just to introduce a little levity, I like this comic. Don't you have any hacking skills? So the days are over, really, of the masked gunman coming in and saying, "Give me all of your assets." Now it's done through the form of ransomware. So now it's done through that network compromise, where now your ransom is going to be paid through Bitcoin or some other alternative form of currency, and that's the way that companies are being held up. So ransomware has had a 15 times increase in just 2 years. We expect from 2019 to 2021, in just 2 years, from the impact of ransomware to go from $11.5 billion to $20 billion. So almost doubling every 2 years. Ransomware continues to be the #1 way that we see claims occur right now. And it causes, not only is it going to cause, an interruption in operations, it's causing business interruption, it's causing more than just that ransom demand. It's really crippling every organization from the top down. And then some other things that we're seeing in the marketplace are damages and costs increasing and expanding. So some of the effects of ransomware, obviously you have your damage and your destruction or loss of data. So when the encryption occurs, not only is it encrypting everything on the network and allowing there to be no access to it, but a lot of the times companies are paying ransom and the information is coming back still damaged or in an unusable format, or some of it will come back, but not all of it will be retrievable. Obviously, the downtime and lost productivity is critical as well. So if you consider some of the impacts of some of the more widely known ransomware attacks, so if you think NotPetya and WannaCry, some of the larger logistical companies were down for 6 to 8 weeks due to the NotPetya ransomware strain alone. And that had almost $1 billion impact on just one organization in particular. So that downtime can be very, very costly from the moment it occurs. The post-attack disruption. So there was an attack on a municipality recently, and the post-attack disruption to the school caused reporting delays to the Department of Education, which impacted the school's actual funding. So the money that they received from the federal government was impacted because of their inability to report on the students that were attending classes and their ability to actually educate the students during that disruption. Costs for forensic investigations are up as well. I don't think that it's very surprising at all if you consider, and Mike, you can probably take a stab at giving us some insight in forensic investigations when you go through your part of the conversation. But forensic companies, the cost to respond to these events is becoming higher and higher, mostly because of the increase in actual claims. Data and system restoration, deletion of hostage data and systems. Again, we are seeing an uptick in the restoration process being impacted by actual information that's been just wiped out completely. And then post cyber attack, of course, there's always going to be a reputational impact. So one of the things that we saw with Target, which they ended up making up, but immediately after their cyber attack back in 2013, 2014, was a drop in earnings. So you see an almost immediate drop in earnings in public facing companies when they experience a cyber attack. Sometimes that number is made back up, sometimes it's not. One of the benefits that I think that happens from cyber attacks, though, is the employee training and direct response. So typically, if an organization does suffer a cyber incident, there tends to be an uptick in employee training, which does nothing but strengthen resiliency overall. And global spending on security awareness training for employees is predicted to be in the $10 billion range by 2027. So in not too long of a time, companies are going to be increasing and spending a significant amount of money to make sure that their employees are not only following protocol, but aren't falling for things like social engineering and phishing attacks. And some of the reasons for that increase in training is now our displaced workforce. So everybody, or most organizations, as a result of COVID-19, have employee bases that are working from home. So this displaced workforce, this forced business continuity plan enactment has really opened up the eyes in the marketplace to how a company has coped with not only the disbursement of their workforce, but the loss of IT oversight and control over how individuals are entering the network, how they're monitoring the network. There's trust and empowerment issues, acceptable usage and code of conduct policies, the general communication around having your employees now be remote and outside of your direct scope of oversight. We've seen an increase in social engineering attacks. Again, because we have all of these employees that are working on a remote basis, in the past, you may have had employees that were sitting next to each other or sitting near each other, and when something interesting or strange or different came in, they might turn to the person sitting next to them and say, hey, did you get this same email? What does this mean? Whereas if we're all working at home in our own isolated environment, we tend to not be as diligent about verifying some of these social engineering emails that are coming in. And then again, those high levels of stress, anxiety, and isolation. So they are definitely contributing to people being less vigilant about social engineering. People are afraid that they're going to lose their job. There's a lot of distractions at home. You might see the cats in the background behind me. I'm actually hiding in my daughter's room today while we do this webinar because my office doesn't have a door. And there's kids and all kinds of animals running all over the place. And so you would probably be seeing like 4 different people running around behind me instead of the cats. So all of that creates a ripe environment for social engineering, and they are exploiting the crisis for their own personal gain. Some of the gaps in traditional insurance, just in the essence of time, I don't want to spend a lot of time on this slide. There are several different policies that may have a slight element of coverage where you could recover from a cyber incident. But really, if you're looking at restoration of data, if you're looking at recovering revenue from a business interruption event, if you're looking at forensics, if you are looking at breach response and notification, if you are looking at your liability to third parties for transferring a virus into their network, your regulatory defense, fines, and penalties, all of these things are only going to come in a cyber policy. So really what I'm trying to share today is that there's a lot of different ways that you could look at cyber resiliency. And if you want to be able to transfer part of that risk, and if you want to keep capital on hand for other things rather than responding to a cyber incident, you can really only find it in a cyber policy. So don't rely on your property, your GL, your E&O, your crime, or your K&R to provide the coverage that's readily available in the marketplace. And it's still at a fairly competitive price as well.
Hey, Heather, could I interrupt maybe with a question real quick?
You sure can.
So Ashley wants to know, and it's relevant to what you just presented there, but she asks, would you recommend buying more E&O and less cyber under the assumption that E&O claims against fiduciaries have the likelihood of being much larger than cyber claims?
So that's a really, really interesting question. And again, it all depends on the nature of the allegation. So when I look at E&O, I tend to see it on a severity factor rather than a frequency factor. And then cyber is kind of the direct opposite. Those claims tend to come in more and more frequently, and the impact can seem like it is less from an economical perspective than a fiduciary claim. However, one of the problems with only relying on your E&O, buying more E&O and less cyber, is that depending on the nature of how the incident occurs, your claim could very easily be denied from your E&O program. So one of the things that we have seen in E&O is, again, if there is an instant, and again, let's just say, I know that we have a lot of financial advisors on the webinar today. So if you are hosting a platform where you either allow individuals to come in and do their trading, or they are relying on you to make trades for them, or they are relying on you for input on what particular investments might be hot right now, so to speak, and that platform is unavailable, and then after a day or two it's back up, and then people are not able to make the decisions that they want to make, or actually initiate trades or initiate changes to their portfolios on the day that they wanted to, because you had a denial of service event or there was a ransomware event, your E&O claim could be denied because the trigger of it wasn't in the actual provision of your professional services. It was due to a cyber event. And the E&O policies always fall back again on whatever that definition of professional services is. And it typically does not extend to things like virus, to things like hacking, to things like any kind of extortion threat, so to speak. So I would say that weigh the risks carefully. There are analytics available. There are tools that you can utilize, especially if you're working with one of the top brokers that specializes in cyber. I won't throw the Willis Towers Watson plug in there right now, but if you're working with a broker who's experienced in cyber, they can provide you with analytics and metrics to help you decide what the most likely cost is of a cyber incident, and then you can weigh that against what a large-scale fiduciary claim would cost as well, and then you can decide how to deploy your capital and how much limit to actually buy. Perfect segue into talking about what the actual structure of a cyber policy looks like. So if you're already buying cyber policy or you are considering buying cyber right now, the policies respond in two ways. So your third-party liability versus your direct first-party cost to the organization. So your third-party liability would be the privacy liability when it comes to personally identifiable information that's either in your care, custody, and control or with a trusted third party, a cloud provider, a vendor. Your network security liability. So again, if you do transfer that ransomware, that virus to a third party's network, you can pay for the restoration of their network as well. Regulatory fines, penalties, defense, if there is an element of PCI of credit cards, those violations as well as the assessments that tend to come along with them are all covered under the third party policy as well. One thing that I think gets overlooked a lot is the internet media liability. So this goes more than just your advertising, and it goes outside just your own website. This is really how you are collecting, storing, utilizing data. That's where all of that coverage comes in. That's not considered a regulatory environment. So it's a really overlooked form of coverage. If you have a GL policy, your advertising is probably not going to be up to the full breadth of coverage that you would find in a cyber policy. And then from the first party side, that's where you're going to find coverage for extortion. So for ransomware events, for any kind of business interruption event that's caused by a virus, that's caused by ransomware, that's caused by an outage at a trusted business partner. So if you are relying on a third party to host your platforms, to host your data environment, and that third party has their own cyber incident and your network is still operating fine, but it impacts your ability to operate, it impacts your operational side, you can cover that with your own cyber policy. So depending on the nature, again, of those contracts that are in place with those third parties, and typically they do push all of the liability back on their customer base, you can get coverage within your own program for an incident or an event at a third party's program. And system failure, that's just another trigger for business interruption. That's the human side of the equation. So that negligence that could cause a system outage or material degradation is covered as well. Your own personal digital assets, so the data that belongs to the organization rather than personally identifiable information, so your own assets, those are covered as well. Reputational factors, so again, that revenue impact, the cost that it might take for you to repair your reputation in the media post-cyber incident, covered under the policy. A new area of coverage is cybercrime. So some of you out there might be buying your own separate crime policy that covers maybe employee theft or wire fraud transfer. Cyber will now pick up some of those same elements from the cyber trigger perspective. So if you think about a social engineered attack that convinces an employee to transfer funds, sometimes that's excluded from the crime policy, but it's picked up under the cyber policy. And it's generally a much, much broader wording than what you even find in those traditional crime policies. And then another element of first party coverage is that immediate response to a cyber incident. So the first thing that you want to do, of course, is get on the phone with legal counsel and get forensics involved if you think it's a significant event and your IT group is saying, hey, look, we really need to get someone in here. This is going to change the scope of what's going on. Those immediate response costs are available to you as well. If there is an element of notification, if there's an element of public relations, if you do have to offer credit monitoring, identity theft monitoring, remediation, that's all covered under that first party element of coverage as well. So there's two different ways that the policies react, and both of them dovetail together to really present the broadest form of response that you can expect for a cyber incident. I won't go through these line by line. Ted, I don't know if you are going to be providing the deck to the attendees if they want it afterwards, but this is just a much more detailed line by line description of the basic coverages that I just spoke on the previous slide. I won't go through them in super great detail because I know we are getting close on time. So one of the things that I want to talk about really while we're kind of wrapping up here is how do you determine what your cyber risk is, and how do you determine what the appropriate limit is to purchase if you are going to utilize the transfers of risk through insurance. So the articulation of risk scenarios, of course, you know, understanding what is most likely to occur and what the worst case scenario is, and then what is that cost that could be associated with within those scenarios. How frequent can you expect an incident to occur, and then how do you insure against it? Do you want to insure for that, you know, 1 in 10 year loss, that 1 in 5 year loss, or do you want to insure for that big one, that target incident, that 1 in 100 year event? Somewhere within those ranges is the right spot for you to pick your insurance, and understanding how the analytics go into it, what the cost could be to the organization, is what's going to help you determine really what the most appropriate limit and retention structure is for you. So the third part, again, would be understanding what that financial consequence would be to the organization. And that could be, you know, physical damage. So replacing all of your physical hardware, all of your physical components. What would be the impact of a business interruption? What would be the impact of your third-party liability? If all of the personally identifiable information in your network is impacted, what does that do to, from a cost perspective, from a forensic perspective, from an actual notification perspective, from a civil liability perspective? There's other hidden costs that I think companies aren't really aware of as well, that can also impact liquidity right after a cyber event. Cyber Quantify, this is just an example of some of the analytics that are available to determine what the impact could be from a cyber event. It will show you, just based on sheer number of records from a privacy liability perspective, if you have 100,000 records, 1 million records, 10 million records in your database, what the catastrophic cost could be versus what the most likely cost would be. So in this basic demo right here, this states that if you had, you know, 10 million records on hand, catastrophically, it could cost $100 million to respond to. But if 90% of the time it's going to be less than 300,000 records that are impacted, or 310,000 records that are impacted, you wouldn't have to buy for that catastrophic loss. So it really is a great way for you to determine, again, what the most cost-effective structure would be for the organization. And then it does the same on the first party side. So at what frequency could you expect there to be a network interruption? How long would it last? And then how do we insure against it? And then the last slide here really is just a visual of which program would offer the most value for your money, for your transfer. And then just analyzing the exposures, and then considering what the actual cyber risk could be from those particular exposures. So what are the exposures that are unique to your organization? And then what are the cyber risk considerations that you should be looking at when you're talking to your insurance broker? A little bit more about Willis Towers Watson again. I want to leave some time for questions. If you want a copy of this deck, you're welcome to have one. Ted can send it out to anyone on the line, but this just talks a little bit more about how you can look at different solutions to help you determine what your risk is, and then how you transfer it through insurance. This last slide is probably the most important one, though, and I think it's probably a nice segue for Mike to talk about what his conversation is going to be about. But if you do nothing else, if you don't buy cyber insurance, if you want to consider it, you know, frivolous as opposed to a way to actually protect and manage your capital, the FBI has advised that all U.S. entities are currently being targeted by the barrage of ransomware, and that these are the very, very basic best practices that you should be doing from an organizational perspective to do everything you can to help mitigate those ransomware attacks. And that would be backing up your data, verifying the backup integrity, focusing on awareness and training of employees, making sure that your patch management system is up to date, Enable anti-malware. There are auto updates, there are regular scans that are available, most likely through whoever you are utilizing for things like your email system and your data loss prevention software. So make sure you are tracking privileged access. So implement the least available privilege for file directory and network share permissions. Disabling macro scripts, implementing software restriction policies and controls, employing the best practices for use of RDP, so that would be your remote desktop, whitelisting of data within the network, and then implementing physical and logistical separation of networks. So keep your crown jewels away from the admin side of the house, make sure there's segregation internally, and then require user interaction for end user apps that are communicating with uncategorized online assets, which is a very, very fancy way of saying that you should be requiring and monitoring anyone who is accessing data within your network at all times. And questions before we move on to Mike?
Let's see. I guess there's a couple questions around, specific. Are you familiar with any incidents that are maybe in the public domain, I guess, is the key consideration, that involve investment advisors or companies that are in the investment advisory world?
Yes. So we do represent some investment advisors. We do have a large portfolio. From the cyber perspective, there are a couple right now where there was a technology platform failure, and the platform failure, because of the length of time that it was unavailable, again, people were not able to access their portfolios, and they were not able to move around some of the assets that they were looking to move. And so again, it was that blended kind of E&O cyber tech claim that came in, and depending again on the policies that were in place, has really impacted whether the claim was covered or not. So we're working on one right now that looks like it's going to be covered to the maximum amount available. And then there's one where they were buying tech E&O with cyber, and they had a very, very small bond policy, and we picked it up mid-claim, so we weren't the broker that placed it, but the broker that placed it, there was a valuations exclusion on the tech and cyber policy, and then the bond excluded cyber triggers, so it's a really messy claim that we're working through right now, trying to determine whether we can get coverage for the actual valuations piece as well. So the individual was able to make trades at a later date, but not for the same price that they were looking for prior to the outage. So it's one of those interesting elements of, again, that blend that you find on the E&O and the cyber side. From a ransomware perspective, ransomware is indiscriminate. We have, I would say, on a daily basis, probably between 10 and 20 ransomware events going on across all industries. And I know that a couple of our financial advisors have been hit with ransomware. In two cases that I can think of off the top of my head, the ransom was negotiated down much, much lower to what the initial demand was. Both companies paid it. We had a third that did not pay it and spent about 6 weeks trying to restore their network from backup, and probably spent about, I think the last time that we checked in with their claim advocate, they were up to about $12 million in restoration costs. So, when we talk about ransomware, there's a number of things that go into whether you're going to pay a ransom or whether you're not. I would say that the quality of your backups and your restoration capabilities is probably a huge factor in whether or not you should be paying it. Again, it's always going to be at your discretion. The carrier will pay either way. They'll either pay the ransom or they'll pay for the restoration process.
Hey, Ted, I can speak to that a little bit too. It's not in the public domain, but we were involved, so I won't mention any names, but we were involved in a case. One of the things that Heather talked about earlier on was business email compromise. And we had a financial advisor that suffered from business email compromise. So they were sent a phishing email, they gave up their credentials, and the malicious actors then got into their email account. Two important lessons to learn from that. Number one is the importance in an incident like that of having somebody like Heather on your side. because the amount of resources that they can bring to bear in the immediate aftermath of an attack in terms of forensic investigation and legal advice. So, I mean, there are two things you need to do right away. Number one, forensic investigation needs to start immediately so that you can preserve evidence and gather as much data as you can. And on the legal side, there are some in some cases, very short deadlines that you have to meet in terms of notification of state and potentially federal authorities, et cetera, and also maybe your customers, depending on what the data breach law is, where those customers are located. And so having those legal resources available to you is something that is super important. And then the other lesson that we learned from that is I think people significantly underestimate the amount of information that is present in their email that gets exposed during a business email compromise. So if anyone on this webinar goes through and looks at their sent items, their deleted items, et cetera, things that they've emailed back and forth to each other, spreadsheets, personally identifiable information, customer information, account information, all kinds of stuff. And a lot of times people just email that internally in the office. And so they think they don't need to be concerned about security. But in the case of a business email compromise, the malicious actor has access to the entire mailbox and therefore access to all of that information.
Absolutely.
Okay. Some huge risks. So Heather, talk to us a little bit about if somebody doesn't currently have cyber coverage, what's the process look like? I mean, what general recommendations would you suggest in finding a broker to help you? And then, I mean, how much time and resources are going to have to be invested to make the right decisions?
So that's also a really good question. When it comes to the actual procurement of the insurance, it's a fairly traditional process. There's an application involved, but the applications, of course, are very, very generic. And the assets that are being covered under a cyber policy vary from organization to organization. So does the standards of security within an organization and some of the things that they're doing to minimize access, to minimize, deploying some of those critical assets to the outside world, so to speak. So what we see a lot of the time is a lot of coordination. So you fill out the application, but that's not really where the process ends. So there will be follow-up questions from the markets that are specific to the industry or specific to the organization. And then the broker consequently will also be utilizing some of their analytical tools to help the potential organization, the potential insured, determine how much insurance they should be considering, what their potential cost could be if there were a cyber incident. And then typically there is a phone call with the markets. If it's something in the world of, the FI space, when we're talking investment advisors, there's not a ton of carriers out there that are really lining up to cover the cyber exposures for investment advisors. So maybe rather than the 60 markets that we have for cyber in general, it might be more like 20 markets. So sometimes a call is not necessary depending on the size and the actual risk factors of a particular organization, but there can be a call. And then typically once quotes come in, you go through the quotes with your broker. They help explain the differences. They'll show where one carrier is stronger than another. And then they can give you, a solid recommendation of which option makes the most sense with which carrier. So it's a little bit like a traditional placement of insurance, but there's definitely more due diligence on the carrier side. So there's more follow-up questions. There's more back and forth. It's more of a transparent process as well. So I mentioned earlier that on the application process in general, you wanted to be really careful about the misrepresentations that you made within those applications. That's one of the reasons why we encourage a call with the markets, is because a lot of the times it's not a hard yes or no. There might be a question on the application that says, do you encrypt data at rest or in transit? And that answer on the application might be no, but there might be a story behind it. Maybe the reason that you're not encrypting data at rest is because you need to be able to nimbly access that information. You need to be able to transfer it internally in order to provide the services to your customer base that you're providing. But you're whitelisting it, you're restricting access. So while you might not be encrypting it completely, while it's at rest on the network and it's a no on the application, the story that you're able to tell the carrier during the conversation is enough that the carrier says, okay, well, this isn't a bad risk. They're not just going around not encrypting critical information. They do have protections in place around it. So it's definitely a bit more of an involved process than just going out and getting, you know, your property policy where you have your locations that are all listed as known perils and there's a dollar amount attached to them. And if there's, you know, a windstorm, you know exactly what the impact is going to be. It's definitely more involved in that, but I don't want to scare anyone off. If you're working with a broker who is familiar with the process, we will hold your hand the whole way. We will walk you through that process. It's not uncommon for a first-time purchaser of cyber for it to take a little bit of time. So, you know, don't go out there thinking that it's going to be, you know, 30 days, you'll have a policy in a month. It can take some time the first time. And one of the reasons that we say it's okay for it to take time is because we want to make sure that you're educated on what you're buying, what your risk is, and what the trade-off of the insurance is. If we can do that in 30 days and get it all put in place, great. But if it takes 6 months, then it takes 6 months, as long as you're in the place at the end of that period of that transactional period to really understand not only the coverage, but also your risk and what you're doing from a protection standpoint, in addition to the buying of insurance.
Okay, well, fantastic. I think this is a good point to kind of segue here. So we'll have formal Q&A in about 10 or 15 minutes or so. So any other questions for Heather, go ahead and throw those into the Q&A log. But we're going to change gears. Michael, you should have keyboard and mouse control and should be able to page forward to your section. Okay.
There we go.
And okay, Michael, go ahead and take it away. And there's a whole bunch of questions too that have come in. Let me make two comments. Number one, yes, as Heather mentioned, we will be providing copies of the slides. So you'll have that as a resource for everybody. And there's a fairly good number of questions around kind of technical and security best practices, and I'll hold those off until Michael goes through his section, and then we'll come back to all the questions together in a couple minutes here.
Sounds great, yeah, and happy to address those. So I want to pivot, as Ted said, just slightly. Really, our focus in relation to what Heather talked about is two things. Number one, our primary focus is really mitigating the risk. Our hope is that you never have to file a claim with somebody like Heather or whatever else, because that's where we're focused, is on mitigating risk. But secondly, if you ever do have to make that call, we want to make sure you're as prepared as you can possibly be in terms of incident response plans, et cetera. And so let me just kind of jump in and go through. So as Ted mentioned at the outset, I have a little bit of a unique blend of background. So first of all, I'm a certified ethical hacker, which I like to say means I have all the knowledge of a hacker, but I use my powers for good instead of evil. And then the second is I'm also an investment advisor association certified compliance professional, which means that I have a lot of background and knowledge on the compliance side of things. And that's where we help registered investment advisors kind of blend the two worlds of cybersecurity and compliance. So just to jump in, I just want to cover a couple of quick things today. First of all, I want to share one data point with you, which I find fascinating. I'm going to talk a little bit about OCIE and NIST, and I know those are two acronyms. I will define those in a later slide, I promise, so just bear with me and give me the license to use OCIE and NIST for the time being. And then really what I want to do is leave you with some actionable advice today that literally you can leave this webinar with kind of a to-do list to get started on kind of getting your arms around this cybersecurity risk management. So I want to start out by just sharing a little bit of data. This is a chart from Verizon's 2019 data breach report. So every year Verizon puts out a huge data breach report where they aggregate all the data from all of the activity that their cybersecurity unit has done over the past year, and then they publish like a 40, 50, 60-page report that just slices and dices that data in all kinds of different ways. It's must reading for anybody in my industry, but this is my favorite chart from last year's report, from the 2019 report. And so the axis along the bottom shows increments of time. So seconds, minutes, hours, days, weeks, months, and years. And then the vertical axis is quantity. And so what this shows is on the top line, it shows how long from the time that a malicious actor takes the first physical visible action to try to breach your network, how long is it until they're successful? And you can see there that the big hump in the graph is somewhere between seconds and minutes. So in other words, from the time they start their attack, they're successful very quickly. The next step down shows exfiltration. So from the time they're into your network, how long does it take before they start to take data out of your network? And whether that's to take it and put it on the dark web to monetize it, or possibly use it against you for some type of espionage or whatever else the case might be. Again, you can see the big hump starts at minutes and goes over hours and days that they're removing data from your network. The third one is the most disturbing thing of all, and that is after they have breached your network and after they have started exfiltrating data, how long does it take you to discover that they're actually there? And what you can see here is that the big hump here is at the months point. And so what that's saying is that the bad guys are resident in your network for months before you even realize that they're there and doing that activity. And then once you discover that they're there, the bottom graph shows that it takes you days generally to get them back out of it. But the disturbing part is that they've already been there for months, and so they've likely already gotten everything that they're looking for. So let's jump in and talk about a little bit of the regulatory background here. So what is OCIE, or the OCIE? That stands for the Office of Compliance Inspections and Examinations. And that's the inspection arm of the SEC, or the Securities and Exchange Commission. So these are the guys that show up at your front door, or in these COVID days, they'll call you on the phone or send you an email to actually conduct a compliance examination. So last year they did 3,809 examinations, which was a 2.7% decrease from the year before. But you also have to remember that last year we had a little bit of a gap in government funding, and so they had 35 days where they couldn't do anything because they didn't have any funding. And so the 2.7% increase is not necessarily unexpected. And the OCIE audits approximately 15% of all registered investment advisors annually. And so if you do the math on that, that means that statistically speaking, you're likely to get audited somewhere in the neighborhood of every 5 to 6 years. And then every year, OCIE puts out a memo of what their examination priorities are for the upcoming year. So in 2020, they put out a memo, and let's talk about what that said. So first of all, information security was one of 8 priorities in their 2020 memo. Information security or cybersecurity has been a priority in this memo every year since they started putting out the memo. And so OCIE is very, very focused on cybersecurity posture within registered investment advisors. And so within information security, they broke that down even further and said the areas that they're really going to look at this year is governance and risk management, which is the whole topic of everything that we're talking about today. Access controls, which is something that Heather talked about in her presentation. DLP, or data loss prevention. So going back to my slide earlier where we're talking about data exfiltration, how can we prevent that from happening so that information doesn't leave our organization? Vendor management, also something that Heather touched on, third party, where systems are compromised through a third party or that type of thing. So are you managing your vendors? And obviously from a compliance standpoint, you're required to do due diligence on your vendors and find out what their standards are in terms of cybersecurity. They're looking at training, which is also something that Heather talked about. So are you providing users with regular ongoing training on things like how to spot a phishing email or how to avoid identity theft or those types of things? Incident response and resiliency. And so this is what I talked about, the second component earlier, that if you ever have to call Heather and file a claim, are you ready for that? How prepared are you for that? So do you have an incident response plan in place? Has it been tested? Have you actually done a tabletop exercise to see how it goes? And how resilient are you? So from the business continuity standpoint, how capable are you to survive some type of a cyber incident? And so what I want to talk about next is NIST, which is the National Institutes of Standards and Technology, and the CSF, which stands for the Cybersecurity Framework. So one of the things that the SEC wants to see is they want to see that you have picked and are aligned with a standard when it comes to cybersecurity. So the one that we like is put out by NIST. Why do we like the NIST standard? Well, first of all, it's the federal government science and technology department. So the fact that this isn't a private standard, but it's a publicly available standard means that it probably has good longevity to it. We don't need to worry about this going away anytime soon. NIST is chartered with measurements and standards, and they put out this document they called the Cybersecurity Framework, or the CSF. Version 1.1 of this document was published in April 16 of 2008. And they have 5 functions. So within this standard, they have 5 functions, 23 categories, and 108 subcategories. And so I just want to give you a little bit of a view. So here is just like a half a dozen of the 108 subcategories that they have within this standard. And so really from a regulatory standpoint, what registered investment advisors need to do is be aware of this standard, and there are 108 different things that you have to comply with here. So we can see if I just take the top one, like physical devices and systems within the organization are inventoried. So my point from this is that if you select this standard, which one of the reasons we like this standard, by the way, it was specifically referenced in a memo from OCIE back in 2015 that this is one standard that you could comply to, is that when the regulator shows up at your door, if you can show that you've chosen this standard and that you are compliant with this standard, then you know you're going to be in a much better shape from a regulatory standpoint. So let's talk about getting started. What is leaving this webinar today? What can you do to get started? So number one, step one is technology compliance. So have you chosen a standard? There are other standards out there besides NIST CSF. We like NIST because it's federally backed and because OCIE specifically referred to it back in their 2015 memo. So have you chosen a standard is step number one. Step number two is, do you have a measurement of compliance? So one of the things that OCIE has said is you do not need to be fully compliant with all 108 line items within that standard. There may be some that for whatever reason don't apply to you. Maybe you're not large enough, maybe you don't participate in that type of activity, whatever else it is. But when the auditor shows up, if you can show that you have considered that line item, you have decided not to comply with it, and you've documented the reasons that you're not complying with it and who was involved in that discussion, that's most likely, assuming that your reasoning is within the realm of something that's reasonable, then that's most likely going to be okay with the auditor. And so you've just got to have a measurement of compliance. That doesn't mean you need to do everything in those 108 steps. It just means that you've got to at least talk about it. Do you have written policies is something they're going to look at. And are those policies centrally stored? Do you have an audit trail associated with those policies? And are they followed by all? In other words, one of the things that OCIE is huge on when an inspector comes in is they want to see not only that you have the written policies, but that you are actually doing what you say in those written policies. And that is a huge area where OCIE will take corrective action or write letters or whatever else, is if you have a written policy, but you're not doing exactly what it says in that written policy, they're going to get you on that every single time. So the second step is to do kind of a rapid security assessment. And so there's a couple of things that we would include in a rapid security assessment. So the first is to do an external port scan. And then the second is to do an internal vulnerability assessment. So what we want to do is we want to look at your organization from the outside and what is exposed from the outside. And then we also want to look at your organization from the inside and where are your weak spots or your soft spots inside the organization. And that comes from an internal vulnerability assessment. And then the last thing that we want to do is kind of a Windows environment assessment. And so this is where we're really drilling in and looking at some of the specifics of your environment. So we want to look at your user accounts. Do you have user accounts that are active for people that have left the company a number of months ago? That's going to be a problem with the OCIE inspector. You also want to look at group membership. So are people members of the appropriate groups that gives them access to the assets they needed, but not members of groups that they shouldn't be in or giving them access to areas that they don't need in order to complete their job. We also want to do a computer inventory audit. Again, going back to the NIST CSF standard that I talked about earlier, you could see that was one of the line items in there. So we want to have that audit, and we also want to make sure that we've captured the aging of those computers as part of that audit as well. We want to do a group policy review. So we want to see what are the elements of your technology policies that are being enforced automatically without having to have human intervention. This cuts out the possibility for human error, which is something that Heather talked about earlier as one of the largest causes of breaches. So if we can implement those things in technology policies rather than relying on a person to do it, we're in a much stronger position. And then we also want to do a non-Windows device scan as well. So we want to figure out what is on your network besides the Windows devices so that we can identify each of those, make sure they're things that are supposed to be on your network and that you don't have any rogue devices or unknown devices that are out there. So that's kind of step two, is that rapid security assessment. And then the third is this model that we developed internally, we call risk-informed decision-making, or RIDM. And essentially what that is you need to start out by conducting a risk assessment. So when we do a risk assessment, which I'm going to talk about in a minute, and the template for this is you go through a number of different predefined elements in your environment. And for each one, you assign two scores. You assign an exposure, probability score, how likely is it to happen, and an exposure score, if it does happen, how damaging is that to the organization. The product of those two things becomes your exposure, and then you can stack rank those in descending order so that the highest exposure is at the top. And then from that, you can develop a mitigation plan. So you can say, okay, we're going to address everything with a score above 50 or this year, or whatever the number is. And then you can put in plan a specific things to do to mitigate those top risks. And that will then feed into your annual strategic plan. One of the things that is super important from a compliance standpoint is make sure that you are documenting all of those discussions and decisions and who's involved in those discussions for compliance purposes. That's one of the things that the OCIE auditors love to see, is they want to see who was involved, what was the discussion, what did you talk about, why did you decide what you decided. And again, even if you don't meet a particular standard, if they can see that you have had that discussion and came to a conclusion based on sound reasoning, they're most likely going to be okay with that. So just to kind of conclude here, I want to just give you, and I know this is an eye chart, you'll get a copy of these slides, but this is kind of our view of everything that an organization needs to do from a compliance standpoint. So we've got customer responsibility at the bottom, we've got some of the basic blocking and tackling with the managed services and the backup. We've got a whole cybersecurity layer, and then for us, we also add for our registered investment advisor customers a compliance layer along the top to help them meet those compliance standards. So there's a couple of ways that you can get started with this, leaving this meeting. So first is a do-it-yourself approach. So the first thing is you need to conduct that risk assessment like I've talked about. We have a free template to do that risk assessment. So we'll give you the same template that we use when we do this for customers, and I'll give you the information on the last slide to get that template. The next thing is you need to do that external vulnerability scan that I talked about. If you will just email me, and my email address is on the last slide, we will do this for the people who are participating in this meeting at no charge. And then again, if you email me, we can also send you our white paper, which dives into these things in even greater detail, our 7 cybersecurity and compliance foundations for registered investment advisors. So if you just shoot me an email, we'll send you that as well. The other approach is we can also do this for you. Obviously, we do this for registered investment advisors all the time. And so we offer this packaged offering called our Baseline Cybersecurity Compliance Assessment Engagement, which includes all of the things that we just talked about, the technology compliance, the internal and external vulnerability scans, the Windows environment assessment, and the risk assessment. So when we do those separately, that's several $1,000s worth of work. However, for the first 5 attendees that sign up that are on today's webinar, we're offering a special on that for $12.95, but only for the first 5 people. So with that, I will jump and give my contact information. Again, if you want that risk assessment template, you can go to itsynergy.com/risk, that is there. If you want that external vulnerability scan or the white paper, just shoot me an email and I'm happy to provide that to you. So Ted, I'll throw it back to you for questions.
Okay, thank you, Michael. Let's see here, let's go. So I'm gonna go to the Q&A log. So we got roughly 10 minutes for Q&A. So we've got a lot of ground to cover. But let me throw one to Heather. So this kind of touches on some of the last things you were talking about in your talk, but Ashley wants to know, do you consult with businesses that have current policies with an existing broker relationship to help strategize or develop a new strategy to relinquish existing policies or obtain replacement policies?
So absolutely. I mean, I don't think it's any secret that one of the ways that you win business is you win it from other brokers. We're very, very happy to take a look at your policy and give you, some points of review of it. We do that all the time. Other brokers have reviewed our policies as well. We can definitely show you if there's room for improvement, if there's things that you need to be considering. The way that it typically works is if another broker has placed a policy, we review it for, accuracy, efficiency, whether it's missing key endorsements or there's gaps in the coverage itself. And then just have a conversation about how you can go about fixing that. You're certainly not obligated to change your brokerage. But again, if it's found that your policy is lacking because you're not working with a broker that has significant cyber capabilities, it's not unusual to change brokers. I hope that answers the question. Yeah, always happy to take a look at a policy and identify those gaps.
Fantastic. And then this one, Heather brought up kind of all the new risks that are being introduced with a huge work from home workforce and everything that's changing there. And Michelle has a question. Michael, you probably should take this one, but do you have a checklist for best practices for hiring remote or virtual employees?
Yeah, so yes, I would say there's a couple of things that we've seen across our registered investment advisor customers that really come into play here. So number one, I think one of the most important decisions that people need to make when it comes to work from home is are you going to allow people to utilize their personal equipment to work from home, or are you going to provide them with corporate-owned equipment to work from home? Obviously, we're advocates of providing corporate-owned equipment just because we can have all of our tools and monitoring and combat all of the malicious actors if we control the machine. So that's an important thing to think about. The other thing to think about as well is that, remember, just because people are working from home doesn't mean that compliance is kind of put on hold and you don't need to be concerned about that. So OC has no sympathy for the fact that your entire staff is working from home, and they're not going to let you down on any of the requirements because of that. So I think it's important that people keep in mind that, you know, maybe in the initial scramble due to COVID, people just kind of, hey, we got to do what we got to do to get set up. But I think now is a great time to kind of circle back and say, okay, where are we from a compliance standpoint?
And I would say, just to add a little bit to that, how effectively you're communicating with those employees is essential as well. So make sure that you are clearly communicating what your policies are surrounding things like information security, data loss prevention, information that can be shared or can't be shared. The last thing you want is employees able to email confidential information to their personal email so that they can print something out at home to look at it. You need to be aware that it changes the environment of how we do our jobs, and there has to be some training and awareness and communication centered around what's appropriate and what's not when it comes to protecting digital assets.
Great. And there was another question, maybe Michael, you could address this, but you know, and Heather talked about the huge opportunity to raise the bar in terms of employee cyber awareness training. What are some of the approaches that you take with your clients to help them get the employee and the workforce to a much higher level of security and a culture of security?
Yeah, I mean, our favorite approach is to alternate on a regular basis between phishing testing and then following that up with training. So we'll send employees of an organization a simulated phishing email, and then we'll collect data on, you know, who clicked the link, who opened the document, et cetera. And then we'll follow that up immediately with cybersecurity awareness training, whether that's recognizing a phishing email or other cybersecurity awareness training. And what we'll often do with a lot of our customers is we'll say, hey, if you did not fall victim to the last phishing email that we sent or phishing simulation that we sent, then here's your 15 or 20-minute training class that you need to take this month, this quarter, whatever it might be. If you did fall victim to the last phishing class, then we're likely going to make you take more than one class, or maybe have some specialized one-on-one training to kind of talk with you about, hey, why should you have recognized that this was a phishing email? And the purpose there isn't really to embarrass somebody. It's really to just say, hey, let us help you to see where you went wrong here and why you should have recognized that as a phishing email.
Great. Go ahead, Heather.
I was going to say there are services that are available through the insurance carriers themselves as well that really complement what Mike and his firm are doing. And most of those are free just by virtue of being an insured within that carrier. So you'll have access to white paper risk management tips, trends that the insurance carriers are seeing. In a lot of cases, they may have small modules that complement what Mike's company does that you can also deploy to your employee force no matter where they're at. So it can also be a way to really enhance some of those additional services and really help to highlight what your employees need to be focusing on.
Okay, and a couple of folks have asked, Heather, how do folks get in touch with you? I mean, we're going to provide copies of the slides and we can provide your contact information, but is there some specific place you want to send folks?
An email is fine. I mean, happy to have anybody reach out via email. We can, start some communications that way. Depending again on where you're located and what region you're in, it might be that if you are interested in talking about cyber to me or to one of my colleagues, there might be someone in the same time zone as you that makes it more efficient for you. But I'm always happy to communicate and talk about cyber and talk about policies and how we can help get you to the point of resiliency through the insurance side.
Fantastic. And then, Michael, why don't you just give folks one more summary of what they should do next in terms of reaching out to you or, to get access to some of these resources?
Yeah, absolutely. So again, just decide whether you want to do the do-it-yourself approach or have us do it for you. With the do-it-yourself approach, we've got these free resources here, itSynergy.com/risk, where you can get our risk assessment template. You can also email me if you want an external vulnerability scan or if you would like a copy of our white paper. Or of course, if you want the do-it-for-you approach and have us come in and do all of this work for you, we do have a special we're offering for $12.95 for the first 5 people, only people who are on this call today live, to get all of that stuff done for you.
Okay, well, fantastic. We are out of time. And I think, as everybody knows, in an hour and 15 minutes, we covered a lot of territory. We had two super experts in their respective fields share a ton of great information. All of their slides are going to be given to everybody. We appreciate people taking time out of your day to join us over lunch, to learn, to help to figure out how to better defend and protect your organization. So we appreciate your time and attention and your questions. Thank you for joining us for another itSynergy webinar and Lunch and Learn, and we hope to see you on a future event. This is Ted Hulsey signing off. Thank you, everybody. Take care.
Thank you.
Thank you.